Alrighty, guys, so the markets are still looking ugly right now. It's about 3 p.m. on the East Coast when I'm filming this. The Russell's down 0.8%. We have the NASDAQ down 2.5%. The Dow's down 0.8%. The S&P's down 1.4%. And we have the VIX up barely, but it's still up 0.75%, as we have gold down 1% and silver's down 1.4%. So pretty much all day today, guys, like you know, if you watched my morning video, my midday video, and obviously if you're watching this video, you probably know we've been selling off all day, but the bulls are still fighting to hold the trend, right? We're still fighting to hold a higher low here above the 180 SMA on the 20-day chart on SPY. We're seeing that same exact thing here on Triple Q, right? We're noticing it's holding 305, 306, right above that 180 SMA, and we have not fallen under. The fact that we have not fallen under the lows from yesterday and the day before, roughly 303 on Triple Q, that's a very good sign for the bulls. And the fact that on SPY, let's go here and zoom in, SPY's held above 407, 408, that's a very good sign for the bulls. Now, we do have another hour of trading left. It's Friday, and power hour on a Friday is typically a crazy time period in the markets, guys. So I don't know. When you're watching this, things might have changed. You know, who knows? Maybe we do end up collapsing into the close. Unfortunately, I can't film this video, after 4 p.m. on the East Coast today, which is why I'm filming it now. But we're going to see, do we end up rallying into close, which would obviously be great, if we took out the highs of the day, or, at least the high from 1 p.m. on the East Coast, 413 on SPY, and roughly, let's see here on Triple Q, 308 on Triple Q. That'd be good for the bulls, if we ran into the close above those points. But it's too early to tell. We have an hour, and again, on power hour, during power hour, on every day, but especially Fridays, things are pretty crazy. So we shall see what's going on, guys, or what ends up happening, rather. And if we pop this 5-day, 5-minute chart, you can see, again, we're still holding the trend, which is solid on Triple Q and on SPY. Again, I mentioned that. So let's see how it ends up playing out. Again, mind you, are we going to rally into close, dump into close? That is the million-dollar question here. So let me know your thoughts in the comments. What do you think? Hit that like button and make sure to subscribe if you haven't done so already. And let's look at these metals charts quickly, because I haven't actually broken these down in a couple of weeks, I feel like, here on the channel. So gold still looks pretty bullish on the 4-hour chart. We're holding the uptrend, and we actually just recently broke out of the 180 SMA. That was a couple of days ago, and the 50 SMA, but now that gold's down 1% on the day when I'm filming this, it's a little bit under the moving averages, but still, it seems like gold has held 1,800, or it did hold the higher low at 1,800. Now we're getting bulls pushing it up mid-high 1,800s. 1,900 is going to be a sticking point for gold, no doubt about it. If we end up getting buying pressure above that point, maybe we make the next push to 2,000. I think that's possible. So for now, I'm going to put my alert. Mark is that we're above 1,900. We shall see what this ends up doing at 1,900. And when it comes to silver, let's pop silver up. We're noticing very similar. Actually, whoa, there's a big difference here for silver. Notice how gold is uptrending, and it actually held the higher low, like I said, in the middle of May at about 1,800. But silver, going back to silver, this ended up falling under the lows from the end of 2021 and pretty much all of this year. So that goes to show silver, and we all know, out of the two metals, yes, silver can go up more than gold in a bull market for metals, but if metals are getting hit in a down market, silver is going to get hit more than gold. And the proof's in the pudding. Look, silver's gotten destroyed, guys, from $27 an ounce to $20. It's down 25% in the past couple of weeks. And again, the lows from the end of December, January, February, those are right around $21.50 to about $22 an ounce. So we took those lows out. That's not good. But with that being said, we're now fighting to get back over 22 again. We're fighting these moving averages. So I think if silver starts making a move towards maybe 23 an ounce, 22.50, and it breaks those points, I'll put my alert at 23 right now. If it starts getting above there, that would be good for the bulls. And maybe we do get that mid to high 20 push from that point in time. So what do you guys think? Let me know your thoughts in the comments. Make sure to smash that like button and subscribe if you haven't done so already. We're super close. I think we're 10 subscribers away from 25,000 subscribers. If you're watching this, guys, and you're not subscribed, make sure to subscribe. And don't forget to join my Patreon, get your stocks, all that good stuff is linked down below. And with that being said, let's talk about some stocks here before I wrap up this video. We're going to keep it quick, short, sweet, simple to end off the week here, guys. So right now, I'm looking at PWR, and a lot of these stocks we're going to talk about today popped up, well, I guess just two of them popped up on my screener. One of them is this one, Quanta Services, PWR. It's currently up 3.4%. What we're noticing is an inverse head and shoulders, clear as day here. Look at that. Left shoulder, we got the head right here, and then we have the right shoulder, boom, and now we're above the moving averages, and the right shoulder seems to be well on its way to completion, and if it does complete, it could get anywhere from 135 $140, towards the top of the channel, maybe even 145 if things get very hot. So I like this, but one thing worth mentioning is it is a little bit stretched right now in the short term, a little bit overbought. So if this comes down a little bit next week, let's say 120 to 125, that's where I'm going to be looking for an entry point on the breakout here. So I like PWR, Quanta Services. HAL, Halliburton, is another one that popped up here on my screener. It's up 2.3%, $41.97 a share. Look at what we got here. Cup and handle. Boom. We have resistance at $43. We recently actually got momentarily to $43.50. So if we end up taking out $42 to about $42.50, I'll put my alert right there. I think there's going to be a breakout on the stock. Where is it going to go? I wish I knew. I wish I could tell you guys. No one knows where it's going to go. But I feel like there's going to be more upside. So I'm going to put my alert. Let me do that here. $43. I put it at $42.50. Let me do it at $43. And let's see what the all-time high is on Halliburton. I'm not even sure, to be honest with you all. Oh, wow. Look at that. All-time high, $74. And it looks like over the past 15 years, we've gotten to $55 multiple times, 1, 2, 3, 4 times. But the one time we got to $75, obviously, that's the all-time high. So in other words here, what I'm trying to get at is if Halliburton starts moving past 43, mid-40s, the next big resistance could be $55. I mean, it is $55. That is where we could be going here in the short term as this stock has been doing very well recently, past couple of months, past year, a couple of years at that. So HAL, watch out for it here. I'm liking it. Monster is another one. MNST, let's pull it up. This is actually one I called out a couple of weeks ago, and you guys probably know Monster stock. It's a slow mover. I called this out probably at like $85, 84. Now it's at 88 a couple of weeks later. That's still a pretty good move, but it's not like one of these stocks that shoots up 30% a day or something like that. And we called out the inverse head and shoulders. It's still intact. You guys can see it. We're riding up, these moving averages. We're above, or rather we're getting a golden cross, or we've seen a golden cross. So there's still, upside here. There's still upside here, especially now that I'm looking at this. Look at that, $90 is resistance. It has been for the past 2, almost 3 weeks. If we start breaking $90, I'm telling you guys, that's where the right shoulder could get that final push, maybe towards 95, $100 a share. So MNST, although it's down a little bit when I'm filming this, I still think it's worth watching heading into next week and, a couple of weeks, the weeks beyond, right? We shall see how it ends up playing out. So MNST, I like it. Merck is another one, MRK. Merck is down $4-5 right now, roughly $5 from the recent high. In other words, it's down 6%. It looks like it is a little bit under, let's be honest, the 50 moving average, but it is above the 180 moving average. Look at that. The uptrend's holding, and this is simply a stock that needed to cool off. If you guys caught my previous video, which I really recommend you guys go watching if you didn't, but if you caught it, you saw we talked about some other healthcare stocks that we're not covering in this video that also look pretty good, whose charts also look pretty good. Merck is another one. Again, it's down 6%, riding the moving average. I think there's going to be, let's put it this way. I don't think it's collapsing quite yet. I think there's going to be another buying wave coming to get it back to the mid-90s. Heck, maybe even 100. Who knows? I don't even know. What's the all-time high on this stock? Oh, wow, we're getting pretty dang close, guys. $96.69. And get this. Wow, look at this. We'll do a little history lesson here, guys, for this part of the video. Impromptu, but we're doing it. August 2000, this stock hit $97. 22 years later, guys, here we are. 22 years later, the stock is under where it was. Holy crap. This is the risk of investing all in or buying stocks when the markets are in a huge bubble. It might take you decades, literally 2 decades, to recoup your investment, to just get to break even. That's assuming that you bought at 96 and you didn't average down. Okay, if you average down, let's say you bought Merck at $96 in 2000, and then you averaged all the way down to $20, and maybe your basis was like 40, 50, 60 bucks, 70 bucks. Okay, maybe your return would obviously be better in that scenario. But let's say you just bought 100 shares at 95 bucks. It would have taken you 20 years, guys. That's crazy. Other stocks that I can use this example with are Intel. Look at Intel. This is one that I own. I am a little bit down on it, but I'm still holding it. And mind you, they paid a dividend. I got that dividend 2 days ago. Nice dividend from Intel. Look, there were 75 bucks back in July of 2000. Now Intel's at 43 bucks. You still would not have made your money back. If you bought at 75 bucks, guys, you're still down 40% to where it is now. Not to mention the opportunity cost. It's just a disaster. So the moral of the story here is be careful when we're seeing irrational, prices, irrational valuations. Don't go all in at those levels. And obviously, when you're in the middle of the mania, it's a little bit harder to identify it. But if something seems to be a little overvalued, a little too good to be true, it's been going on way too long to the upside, use some common freaking sense, guys. In reality, people are smarter than they think they are, and you can you can sniff things out. What am I trying to say here? And Intel, that's just one. That's an example of one. Merck's an example, and there's plenty other ones. We're not going to dive into that rabbit hole in this video, but keep that in mind that there's people that invested in 2000. And they're not recouping their money yet. I guess we could use another example, the S&P 500. From what years was that? It was the lost decade, right? Let me show you here. Yeah, look at that. S&P 500 from 2000, April 2000, and went from, and we're looking at SPY here, same crap, whatever. SPY went from 155 in 2000, and in 2008, it was at 155. I mean, it didn't gain anything, and then it collapsed down to 60, and then it went on that rapid, the rapid, crazy freaking move all the way to 480, where we're still closer to 480 today than we are to 60 bucks, right, guys? So I mean, it's just it's crazy. We all say don't time the market, because if you try, no one can time the market, because if you try and go all in on a stock at one point, it could be a nightmare like Intel. But if you're averaging in over time, you're buying at the ups or the downs, you get a more smoothed out cost basis, you're going to be better off, right? Like I said with Merck, if you bought all the way down, you would still have made money, and mind you, it wouldn't have been a great return, but still you would have made money. Same with Intel. But if you buy all in at one high price, overvalued, you could get screwed. So let's move on. There's one more stock I want to talk about here, which is Activision. And I've been thinking about doing an arbitrage. What do you want to call it here? An arbitrage play on Activision. I've been going back and forth on it for the past couple of weeks because, as you all probably know, Activision was bought out by Microsoft, right? This was months ago. They got bought out for 90 something per share. What was it, like 95 or 92 or whatever? It doesn't matter, what the share price, it doesn't really matter for the point I'm trying to make here. I want to see if I can, I really can do this. If the deal goes through, if you buy the shares at 78, They get bought out at 95 if the deal officially goes through. You make that spread. And that's kind of what I'm looking to do here. But the risk is if the deal does not go through, Activision might fall back to $50. It might go back to $60, $55. Who knows? So I'm kind of looking to do that. I'm still, again, debating on it, whether or not I want to actually, load up on some Activision and bank on the deal going through. We shall see. And if you guys were in my Patreon, months ago, you remember that I actually owned Activision stock before the buyout or the news that the buyout came. The stock shot up. I sold out, made a freaking 50% return. It was very quick. And, I've been out of it since. I locked in the profits. I forget exactly where, but I locked in the profits. And now I'm it's been months. The markets got hit very hard in April, May. Obviously, Activision didn't get hit much at all. So I'm thinking about putting some money. I might put some money into it. We will see. Have you guys thought about doing that? Let me know in the comments. And I guess with that being said, let's wrap the video up. It's 3:15. I'm going to wrap it up here, but we can see the markets are slowly creeping worse, guys, or creeping more down or to the downside. What am I trying to say here? The Nasdaq's now down almost 3%. SPY's looking like it wants to go to the lows of the day. Triple Q might already almost be there. Almost at the lows of the day. So when you're watching this, it might have gotten way uglier. We will see, guys. Let me know in the comments. Hit that like button. Subscribe. Join my Patreon if you want all my real-time buys, sells, call-outs, morning videos, everything I'm doing. That's linked down below. Or go to stocksurfest.com/Patreon. And don't forget to get your free money from Moomoo. Up to 5 free shares of stock, each up to $2,500 with a $100 deposit. And you could also get 6 free stocks from Webull with any amount deposited. I'm telling you guys, this is free money. It also helps out the channel. I appreciate all of you. As always, all that is linked down below. Have a great weekend. I'll see you in the next video. Peace out.